So section 13.2, going into home and property insurance and what homeowners insurance covers. And there's a lot of different things that homeowners insurance covers. And we're going to dive right into those now. So what is homeowners insurance? It's coverage that provides protections for your residence, so for your house, and its associated financial risks, such as damage to personal property, injury to others. Remember, insurance is all about protecting you against risk. And what homeowners insurance covers, of course, first is the building. So any damage to your home or any other structure on the property. So that could be trees, that could be landscaping, that can be the shed. So anything that is on your actual property, outside of the house, including the house as well, but anything outside of the house is protected. Okay. So when we say building, just don't think of the house. Second, additional living expenses. So what that means is homeowner insurance will cover, say, a hotel if you had to, say, live there for 2 or 3 weeks, if your house ever got caught on fire, or if it was ever damaged and you couldn't live there and you had to be put somewhere else for you to live while your home is being repaired. Okay, so 1 and 2 of what homeowners insurance covers. The third, personal property. Now that would be furniture, appliances, clothing. Homeowners insurance covers that up to a certain amount. Okay. And what you can also add to that is what's called a personal property floater. So for any items that are not covered, this personal property floater is insurance that covers items of high value and they're specific. So you register those specific items that you want to have. Think of it as its own personal insurance. Okay, so for example, an engagement ring, I can add a personal property floater to that specific item because it's of high value. Engagement rings are pretty expensive. Okay, so I can include that in my insurance coverage plan. Homeowners insurance also covers personal liability and related coverage. Now, this is when it's our fault, your fault. Okay, so say your kids are playing baseball in the backyard and he hits the ball and it smashes into your neighbor's window and breaks their window. Okay, homeowners insurance will cover that repair. All right, it will also cover what's called medical payments coverage. So if it's icy out, especially in New Jersey, we get a lot of snow, and a guest walks on your steps, falls, and breaks a leg or two. Okay, your insurance will cover their medical payments. All right, if they had to be then transfer them to a hospital. Also, they cover specialized coverage. Now, this usually needs to be purchased inside the coverage. Okay, it's usually not covered, something that you have to include. But this specialized coverage is for earthquakes or flood insurance, hurricanes, so of specific specialized coverage that you don't see every so often. This isn't your common rainstorm. So that's what a homeowner's insurance. You can get insurance if you're a renter. And we talked about in class owning and renting and the positives and negatives. Now, this is insurance if you're renting. It's called renter's insurance. And you just have to remember when you move into a landlord's building, your property is not covered under their policy. Just because the landlord has a policy doesn't mean you're covered underneath it. All right, you have to go ahead and purchase your own separate insurance. Now, this insurance covers personal property of yours, additional living expenses, and personal liability and related coverage. So the same three that we talked about in homeowners insurance, that's what's included in renter's insurance, but only those three. All right, kind of the meat of insurance. But remember, this is something that you have to purchase as a renter. So include that in your budget and under your fixed expenses. Now, how much do you actually need in terms of coverage? When insurance companies when they have their claim settlements, how they base it off of is on one of these two methods. First one being actual cash value method. So that's based on the replacement cost of the item minus depreciation. Depreciation is the loss of value as an item gets older. Your computer, your car, as day by day, month, years go by, they lose its value. So when you ask how much coverage do you need in terms of with settlements from insurance companies, they take the value, the replacement cost of the item, and they minus the depreciation. That's the actual cash value, and that's what they'll cover for you. They base their claim settlements off of that method, or I should say, and the replacement value method, which is just a full cost and there is no depreciation. So just the full cost of repairing or replacing an item. Okay. So that's how insurance companies base claim settlements. It's either the actual cash value minus depreciation or just the entire replacement value method in full. So you have an idea of how the insurances handle their claims. Now, the cost of home insurance. And there's a bunch of different factors, and I know it's partially cut off at the bottom. But first one is location. And remember, insurance companies, the less risky you are, the less you'll pay. But the more risky that you are in terms of where you live, type of structure, the more you're going to pay. Because remember, your insurances are covering you if anything were to happen. They're taking on that financial burden. All right. So it's a risky business for them if you live closer to hazardous items. And I'll go into an example. So knowing that, first thing, location. If you live closer to a water supply, say a fire hydrant, you pay lower in home insurance because you're not as risky. If you're in an area where crime is common and is higher, you're going to pay more because there's a higher chance of something happening to your property. So you're more of a risk in your insurance company, you're going to pay more. Second is types of structure. If you have a brick home, you're going to pay lower because usually you're going to pay lower. For earthquakes, now, and this is for a specific example, with earthquakes, brick is going to cost more because wood is more likely to survive an earthquake. So overall, between brick and wood, you usually would pay less with brick. But in terms of earthquake coverage, and we talk about that specialized coverage, okay, since wood is more likely to survive and brick is more risky, thus you're going to be paying more. All right. Third is price, coverage amount, and policy type. More expensive house, more expensive policy because you probably have a lot more expensive items inside your house, and just the overall cost to repair your house is going to be more expensive. Fourth, and there are also, besides the factors of how your cost of your insurance is going to be, you can also receive discounts, and which just lowers your risk, okay, and lowers your payments. Remember, risk is the key factor of this chapter. If you have a fire extinguisher in your home, if you have a security system installed, having all those little things decrease your risk and thus will decrease your home insurance cost. All right. And when you have home insurance and you've learned throughout this chapter, depending on whatever you're buying as a consumer, compare your companies. And research shows that you can save up to 25% by doing your homework and comparing companies. All right. So talk about home insurance, renters insurance. We're going to go on to talking about transportation next. And then we'll jump back into this chapter, finishing up with motor vehicle insurance.